This is Steve Hayes in London at the EPRA annual conference. I have with me Gerard Groener, who's the CEO of CORIO. Gerard, welcome.
Thank you.
How do you see the situation at the moment generally in the European real estate market?
Well, that's a broad question. I specifically because we have our business in the retail market, running shopping centers. In general, what you see is that everybody is sort of hesitating, making big moves. Everybody is uncertain what the next 6 to 12 months will bring. Compared to 6 months ago, you see a little bit of opening up in some markets. Germany, there's more opening up in assets coming to the market. Of course, what we've seen over the last year is that new product is hardly opening up. There's less new development started up. Financing conditions are not becoming easier, but at the same time, bond yields stay low. Inflation is going down. It's an uncertain environment, seeing where the market will go. A lot will depend on how also politicians will handle some issues that we have in Southern Europe.
You mentioned Southern Europe and your share price has been affected by the situation there because you have an exposure obviously in shopping centre investments in Southern Europe.
Yeah.
How do you think the situation is going to develop? Do you think there is going to be a collapse in the Eurozone, and are you prepared for that scenario?
Well, how can you prepare for a collapse? It's difficult to say. If you would have liked to bail out of Spain, you should have done so 3 years ago or 4 years ago, maybe even. So that's not the time. I think you should focus on your existing assets and your existing operations. And then again, in the retail market, of course, it is not about the general number. It's about what assets do you own and how do they perform? How are they in their micro environment performing? What is the competitive position? And then what has always been the case, even in a poor market, you can have an outperforming project. And even in a very up market, you can have a bleeder. So you should be very careful on sort of the asset allocation that you take. And the micro environment, the specifics of the project and its environment, its catchment area will determine whether you'll be successful in getting a good return or not. And then looking at Southern Europe, our exposure is predominantly in Italy. Looking at that country having roughly 18% of our portfolio exposure, I think Italy has been outperforming over the last 5-6 years throughout the crisis. Constantly, at least that's what we see in our portfolio, and that is sort of an example of what I just stated, outperforming with a constant between 3 and 6% like for like over the last 5 years. I think that's an extraordinary performance based on the highest quality product and a good team.
And how's the situation in the Dutch retail market at the moment, and how do you see the outlook for the next 12 months in the Netherlands?
In the Netherlands is very stable at the moment. Occupancy rates stay high. What you see is that vacancy creeps in, but predominantly on the B and C locations. So we don't see that in our portfolio currently. Retailers' turnovers are depending a little bit on the sector that they're in electronics. It's clearly going down slightly. In fashion, it's fairly stable, going down a little bit. In food, it's still increasing, predominantly based on price, not on volume. Overall, also because we guess, it's not a real guess, but it's an analysis. We still have a fairly low occupancy cost ratio in the Netherlands, somewhere between 9 and 10%. We cannot assess it clearly because the Netherlands is one of the only countries that doesn't use turnover leases.
And CORIO itself, what do you see as the biggest challenges and opportunities for your company over the next 12 months?
I think the biggest challenge is to make yourself flexible and make sure that you can adapt to rapid changes that could that could occur. And secondly, and that is more on the midterm, make your company adaptable to change, because I think retail formats, brands, new concepts will have only a shorter life cycle if we proceed into the future, and that is where we will be predominantly. But they will have shorter life cycles ongoing. So that is something the whole real estate market, but specifically retail, needs to think about, the adaptability to change. I think the times that you could just set up a mall and fill it with retailers, and then based on an ever increasing consumer spend profile, you could run a nice return. I think those days are over. We're looking at, I think in average, close to zero growth for the next years. So you have to concentrate on the dominant assets to gain more market share in terms of retail sales, to make sure that you can increase your rents. That's one thing. Two, I think you need to do more than just leasing up retail space. You have to adapt to new technology. That means you have to select retailers that not only have a good running business, but also have a sensible internet strategy, so they're capable of surviving in that heavy competitive field. Secondly, you have to adapt to what new technology offers you in getting closer to the consumer in terms of social networking, getting to know your consumer, setting up Wi-Fi networks, following your consumers and offering them additional services. So all those things need to be changed.
How do you see investors viewing the listed European real estate market in Europe at the moment? Do you think that they are generally positive on the sector, or is it a negative outlook overall for listed companies in Europe?
I think they're being cautious. I think they're being cautious, and what you've seen over the last 3, 4, 5 weeks is basically cautiousness backing out of Southern Europe, with an uncertain outlook on how politicians will handle the issue. And they're just trying to get more flexible, being more cautious to see how they can adapt to the new situation. So that is the basic reason for their attitude, and you can sense some nervousness because there is, many of their assets, apart from real estate, are in the red.
Thank you very much indeed, Gerard. Thank you wel.
You're welcome.
For this and more interviews, please go to epra.com and read.com.